All right, welcome back, everybody. It's Tuesday, so your favorite hosts, Tim and Tim, are back again every Tuesday, 10 a.m. Eastern Time. We do our live show and we talk about things going on in the market, things that we're learning, things that we're implementing. Just a real down to earth, transparent conversation between the two of us. We talk about current events and how they're impacting our businesses and our decision making processes and things that we're working on. And we just kind of open up the kimono and show you guys what it looks like to own and operate commercial real estate from our point of view. So this week we got another great, fun episode. I've been really liking kind of some of the brain thinking we've been doing about how to spur up a little bit more engagement and more exciting show topics and things, because we don't want to just be like regurgitating information or um, kind of talking about the same things that everyone talks about, it's important stuff, but it's like, let's talk about some other topics that might be not be discussed as much. And this one, I think you guys are going to find pretty interesting. We're calling it the zombie property episode. No, our shirts are not color matched to Cedric. Mine's like a wine colored, and his is red. So we're not matching today. But all right,
It's brick, brick, brick.
mine's like wine colored. All right, so we're talking about zombie properties today, and you might be saying, "What is a zombie property, Tim?" And I mean, if we define what a zombie is, that they just kind of walk around aimlessly, very lifeless, not really doing much. Um, do you have a property that could be classified as a zombie property, meaning it's not cash flowing very well? You can't refinance it because it's the leverage is kind of maxed out, and maybe the NOI is down from where it used to be. Um, You can't sell it because the market's kind of slow. Sorry, I lost my train of thought. You can't sell it, you can't refinance it, and it's not cash flowing, right? It's just kind of zombieing along and just kind of waiting for the next real estate pop where something's going to happen and then it's going to spur some economy, some transactions. Because let's be honest, like commercial real estate right now is in a lull. There's really not a lot of transactions going on. I feel like a lot of properties are in either distress or zombie mode. I don't really know. I mean, Tim, can you think of anybody that's like thriving right now?
Um, I can't think of any operators that are thriving right now. I think brokers are thriving right now because here's kind of the weird thing. It's like we say things aren't selling, say things aren't moving, but dude, brokers are busy. When I
Oh
talk,
yeah, they're saying, dude, BOVs are through the roof right now.
yeah, when I talk to like brokers, one of our favorite guys here in Charlotte, man, we had a good conversation with him last week. He's like, man, I'm having to be very picky what I take on because everybody's reaching out asking me to do a BOV, look at something because they want to sell it or this or that or the other. And he's like, I, I gotta make sure I'm utilizing my time correctly. My team's only so big, so if I'm taking something on, I need to make sure that it's sellable.
Yeah.
Um,
Right. I mean, it's all the owners that have zombie properties, right? They're like, well, maybe this guy can do something better on a BOV and I can either sell it or I can get out of it and I can move the money around. I hate to say it though, but if you got a zombie property and you got time on your debt, you should just sit down
yeah,
and wait.
yeah,
Just let it kind of zombie along. The number one thing that you can, Warren Buffett, right? Don't lose money is rule number one. And if you got long-term debt, 5, 6, 7, 10-year debt on it, if it's not cash flowing right now, that's okay. As long as it's not losing money, I actually saw somebody made a post. It was like, oh, was it JD Crowell? I don't know if he's watching the show right now, but JD made a post about how he had to get rid of an asset because it was cash flow negative, right? And he was like, this is not an asset, it's a liability.
yeah,
If you have a zombie property right now, it's not a liability.
yeah.
You're just in a waiting game and you need to be patient and you need to wait for something to happen in the real estate market, whether rates go down and buying activity goes back up, or rents start to go up because of inflation and we start to see some insurance cost price reductions, which we've already started to see. You got to wait. You got to be patient, right? And real
Yeah.
estate's a long game. It's not this, 2, 3 year pop game. It's not like single family fix and flips, right? Commercial real estate takes time and you're going to be in it for the long run.
Yeah, and Tim, I think, and this next little comment here, this is not a pointing the finger at anybody. It's just a like, hey, I think we're starting, after the fact, you start to see like some symptoms of something that you didn't notice before, right? And we're starting to see some of the symptoms with investors, like you just said. Hey, it's not a flip, right? It's not a single family flip. Last week, I had a conversation with a couple that were clearly single family flippers, and this was their first multifamily property they had invested in like 2 years ago. And here we are. Tim and I are up on a refi. The refi, the numbers coming back at refi aren't what we thought they would be 2 years ago. Anybody tell me if they're shocked that that's happening anywhere, right? And
Hmm.
and they were like, well, we thought we'd get our money back in 2 years. There was a scenario here where you sold in 2 years, and I'm like, yeah, that was one scenario of like three that we showed
Yeah.
everybody.
Yeah.
And guys, the market is not like that right now. And I think what we're starting to see is guys like 2 years ago when everybody and their sister wanted to invest and it was easy to raise money. Like we're starting to see that some of the investors that invested didn't necessarily truly understand the investment they were making, right?
Hmm.
And they didn't understand that, hey, this may be a 2 year hold, it may be a 5 year hold, it may be a 10 year hold, right?
Right. Right.
Because like Vitali said, time, don't lose money, and time buys you time, time, time buys you, you know, a lot of things, right?
Are
And
you going to
and
say
so
time buys you time?
yeah, time buys you time. So time buys you a lot of things. What I want to say is like time corrects a lot of problems, right?
Yeah.
And
Time can be your savior.
so, but at the end of the day, it's like, the conversation I'm having, I'm like, no, guys, we're in this for another five.
Hmm.
Truly, we're in this for another 3 to 5. And I was explaining the whole debt structure and everything to them, but it's like, guys, we're in this for a little while. And the good news is your investment is protected. We're able to, this isn't a zombie property that we're talking about. We're able to refi it. It's going to cash flow at refi, and we're going to be able to return some capital at the refi, right? But I think we're starting to see some of that, and these zombie properties are like Tim's talking about. It's like, they are cash flowing. They're not paying that investor pref, but they are cash flowing. They're not a liability. We're starting to see some of those investors come out and say, "Hey, I'm not happy about this." It's like, but you're not in a bad spot, guys.
Yeah.
Like
Yeah.
it's just kind of muddling along right now, right? And it's not sexy and it's not awesome. But
Right.
it's not dead, right?
It's not dead.
Right.
Yeah. It's still alive and moving. It's just not performing as well as we thought. And who knew that insurance costs were going to do what they're going to do, right? I mean, think we were just on a call with one of our major LP investors, and I updated them about saving 30% in our insurance costs. I mean, he was ecstatic, right? I mean, that was a big expense that had gone down drastically, and I mean, just the money that went down on our insurance covers our annual preferred return, right? That's substantial in terms of cash flow. So I know we talk about it all the time, but as long as your deal is paying for its debt and you have time, you're good. Um, Now, the returns might not be as sexy as we thought they were going to be, advertising a 15% average annual return or better. Maybe it's only 8, 9, or 10% per year, but that's still, it's not a bad investment if you're making 10% per year. If you think about people put money in stock market and they're good with 6, 7, 8%, 9%, 10% per year is a great year. Well,
Yeah.
if real estate can do that over a 10-year period, isn't that a great return still as well? I think it's a matter of perspective, right? Yeah, I
Yeah.
mean, there could be a black swan event where property values skyrocket again, but we're not modeling that. We're not underwriting for it. We're taking a conservative look at it and saying, well, if we continue to grow this consistently, we know the markets now that we've owned these properties for 2, 3 years. And what is it really ultimately going to do? I mean, what can we budget for things to go up and actual costs, right? Actual rent rolls, because we've seen, well, you can underwrite to a 75 or $80 increase year over year on your rents, but your residents might not be able to afford it. And there's also a balancing act of, well, is it better to go up $30 a year and not lose a resident, or go up $80 a year, lose a month of vacancy and do a turn? So a lot of that has changed some of the projected
Yeah.
rebudgets for some of the properties that we own. Um, but yeah, so Joe Bisbing asks, "Hey, Should the goal always to be to get long-term debt? I would say it depends. If your intention is to flip the property, then no, you don't want long-term debt. But if your
Right.
intention is to have long-term cash flow and growth and steady returns, then yes, because long-term debt
Yeah.
will take a lot of pressure off of you from achieving a business plan. Because let me tell you, it's a lot easier to walk the rents up over a 5-year period than to rip the band-aid off in a 2-year period,
Right.
right?
Yeah.
And that exactly goes back to what I was just talking about of like balancing act between taking on vacancy and turn costs versus a $30 increase and having some loss to the market rate rent, right?
Yeah. Because man, like $100 increase that requires tenant turnover is expensive. Is
Very
really expensive,
expensive.
guys. And it, and Joe, one other thing, and I kind of mentioned this when I was talking about that investor I talked to last week. Not to go too far down this road, but yeah, like Vitali said, if your intention is to flip it, do not put it in a long-term debt because most long-term debt comes with um, decentivization to flip quickly. And what I mean by that is like there's typically prepays in there in the first couple of years that just make it not feasible unless
Yeah.
somebody's going to come with like some crazy offer.
Hundreds of
Um,
thousands of dollars it could be.
yeah, and that's and just so you know, that was part of the conversation I had with those guys. I was like, no, guys, we're putting this on 5-year debt, and in the first 2 to 3 years, it's not feasible. Um,
Mhm.
so, we're on long term. We bought ourselves times. It's going to cash flow. Sit back and relax, enjoy.
Yeah, I
Um,
mean, in full disclosure, we have one property that has been a zombie property for about 2.5 years now. And it's doing fine. It's full, it's collected. The rents continue to go up 25 to $50 per year. The insurance cost wiped out a lot of the cash flow and the value, and it's not paying any pref, but it's paying for itself. And it's like, okay, well, the money's safe, the money's secure. It's not making a return, but the other side of the coin is like, well, everyone got the depreciation and is using the depreciation along the whole, the life of the investment, right? So there's benefits there, and it's all, you don't put all your eggs in one basket. You don't put all your money into one deal. You don't put all your money into real estate. You don't put all your money into stocks. You don't put all your money into Bitcoin. It's a portfolio basis, looking at how your average return is handled and what are some of the pros and cons of each investment that you're doing. Um, so Cedric asks, what was adjusted in your insurance that allowed it was a 30% reduction? Our rate, there was a significant change in the rate. So we were paying 71 cents per $100 of total insured value. And our rate with the new insurance company went down to 54. I think it's 54 cents per hundred. So the coverage stayed the same. The deductibles stayed the same. The loss limit stayed the same. It's just purely the rate or the cost had gone down, and that's a reflection of the insurance company's analysis of the risk. As the risk goes down, the rate goes down. So that was it, right? With multifamily, how short of a hold do you consider a flip, and what do you consider long term? I would consider in multifamily a flip would be under 2 years, and a long term hold would be 5+ years. Do you agree or disagree on that?
I would agree.
Yeah.
Um, yeah, that's our perspective, guys.
Yeah, our perspective, right.
I, we know a guy that if he holds anything more than 12 months, it's a long-term hold. Um,
Yeah. So, I don't know. I mean, so do any of you guys out there in the comments right now, do you guys have any deals that are zombie deals that are just kinda I don't wanna say struggling along, they're just kinda just there, right? It's paying its debt, it's full, it's doing what it needs to do, it's just kind of in a wait and see type of mode. Um, I think there's more people out there than you would think that are in the zombie mode. I mean, based on the brokers, getting all the
I'm glad
BOD action.
I'm glad you said that, man, because like everybody, like Tim said at the beginning of this call, transparency. This is safe space, guys. Like, don't be afraid to admit this because I got to be honest. Like, I see too many guys out there like pitching everything's great
Yeah,
to believe it, especially after you have the broker
yeah.
conversations. To Tim's point,
Look at this.
so
So, yeah. So Dan says that my home is in the zombie mode. Yeah, that's true. I do believe that. Logan Casey says he's got a few in the zombie mode. I got LinkedIn user. I don't know who this is. Said iced crushed us. So look, guys, we're not the only ones. I mean, but it's also
See,
not a bad thing to have a deal in zombie mode, right? You're not
this,
losing money. You got time,
I
and
just have to I just have to ask real quick. Ice crushed us LinkedIn user. Mark, is that you? I mean, seriously, I'm asking, is that Mark? Um, so see if he
I don't know.
replies. Um,
But yeah,
because
I
yeah,
mean,
man.
it's not uncommon right now for people to have deals in the zombie mode, and I actually let me say this. I have more respect for people that are willing to admit they have deals in the zombie mode, but it also goes to show that they are paying attention to the deals. They are actively involved in the deals to make sure that expense management is good and income management is good. I think, people have said this. I'm not the first person to say this. He said yes. That is Mark. Um, this is not the first time anybody has said this, that this is the age of the operator, right? Where when you're paying attention to your deals, that's when you can ensure that you're going to, stabilize your asset and you'll have it for
Yeah.
the long term. The goal here is the long term, right? At the end of the day, it's people got too accustomed to being able to flip in and out of a deal between
Yeah.
2019 and 2021, right? 2022. It's like, oh, you just buy something, you own it, and then when your debt's up, you put it up for sale and you sell it and you make a bunch of money, right? Like that's gone. Property values are down 20, 30% in a lot of, Sunbelt regions where we buy. And it is what it is.
Yeah.
Um,
Yeah, and just real quick, hey Mark, and I only asked that, man, because you're not the only one. Like I've heard from a number of guys, and I happen to know like at least one of the properties Mark's talking about. But um, there's a number of guys that are out there seeing that exact same thing. For the guys like, and I think that brings up something. There's a ton of reasons why this is happening. ICE being one of them. The
mhm.
deportations and the roundups that are going around, like they're causing properties to go from 90+% occupied to 60% occupied overnight. And I'm not embellishing with that number, guys. Like that is truly happening. Um,
Yeah, tenants and labor just skip on us for spending the next quarter, releasing units that are now empty, turn costs, lots of income hurts, stalled
yeah,
distributions. Yeah, I mean, we're suffering from some of the same things. We had one property down in Mississippi. It was humming along, 96% occupied for the last 2 years, steady rent increases, and then
yeah,
literally in a month, we had 17 units go delinquent, and we had the manager walk in and they're like, "They all skipped." We're
they
like, "What?"
left. They left.
They just
Yeah,
left.
yeah.
Yeah, I mean, it's pretty wild. I mean, it sounds like a pretty wild excuse, but it it is
It's
what it
happening.
is. I mean, not gonna
Yeah.
lie to you.
Well, and then Tim, the other side of that too is like our crews, right? Like our crews,
Yeah.
they're starting to say, our roofing crews, our reno crews, they're starting to say, hey, I used to have 6 crews. I have 2. Now I
Yep.
have 2 because
Mhm.
my guys are gone. My guys are
Yep.
gone and I can't find more. Right. So
Yep.
there's a number of reasons this is happening, guys.
Yeah.
But
Yeah,
and Cedric,
insurance, inflation, tariffs. Yeah, we talk about all that stuff. I mean, everyone's feeling it. If you
yeah,
say that you're not feeling that pressure, I'll call you a liar.
yeah, and Cedric, just so you know, man, you are not alone.
Yeah.
100%, you are not alone.
I
And
think it's us saying that we have zombie. I mean, we've had a zombie property for a while that, once you identify it and you put it out there, you start to see everyone else is going through the same problems.
yeah,
Tim and I we're just willing to talk about it.
yeah, yeah, because I can promise you guys, like, I mean, just I won't call anybody out, but I can promise you, I'm invested in a couple of deals. And there's a couple there's a group out there, and like everything's hunky dory. Like on social media, everything that they're saying, everything's hunky dory. Well, I'm in 2 of their deals, and it ain't hunky dory. Okay, so don't. I mean, if you don't, I'll just say this: don't feel like a failure because you have something that's humming along but not paying your investors. Because
Oh,
if you're humming along right now and you're paying your bills and you're keeping your reserves high and you're able to kind of hold on to the property, yeah, that's a win right now.
that's a win. Yeah. What's funny is I'll give credit to my wife here. I maybe 2, 3 weeks ago, things got a little stressful, and my wife could tell I was stressed. And she was like, "What's wrong?" And I was like, I feel like a failure because we're not
Yeah,
able to meet on some investor expectations. We're not paying distributions. I got investors that are upset. And, she was the one that kind of talked me out of it. But it was like, yeah, I feel like a failure that I said I was going to do something and I haven't performed on that.
Yeah.
But you think about it from the other perspective, it's all things that I can't control: tariffs, insurance, taxes, inflation, ice, people moving out, rented tenants skipping. Like, I can't control that, right? And it's not for lack of effort or care. I mean, Tim and I, we work. I hate to say around the clock, but we do work, generally around the clock on weekends, nights, whatever the job needs to be done. And sometimes you feel like a failure because you feel like you're on an island of, I'm the only one suffering with this problem. But look, I mean, you can tell everyone in the comments here, I got a zombie property. I have deals that haven't worked out. Ice crushed us. Like, there's so many people out there that are suffering from the same problems. And what you need to do is focus on making sure you protect your investment, you protect your investors. And by protecting your investors does not mean make forced distributions. It means making the hard conversation about keeping reserves high so that if an insurance claim happens, you have the money to pay it. If you have residents move out for unexpected reasons, you have the money to pay it and the renovations to do the work. The stress comes on when the liquidity's gone, right? So if you have liquidity, you will be fine. You will be
Yeah.
okay. It's when you run out of liquidity, that's when things get stressful and they get difficult. So focus on liquidity above all else.
Yeah. And just remember, I mean, time heals a lot of things, right? And at the end of the day, your investors may be upset now, but don't lose their capital, make a return for them down the road. And, they're probably not going to be too unhappy with you later. Um,
Hmm.
in the moment it just feels bad, right?
Oh yeah,
Um,
yeah. Well, it's like that. It's pick your hard. Do you
right.
want to have a hard conversation now, or have a hard conversation later about how you lost it?
Yeah. And
Oh,
I know this is kind of a different example and everything, but I always like Christian Bell's character, the fund manager in The Big Short,
yeah.
right? And and he goes through that period where all his investors are like, "I'm suing you. I want my money back." And he just basically says, "You know what? I'm not letting you out. Like, I'm not letting you out. I'm calling it. I have control. I'm calling it." And at the end of the day, I mean, his investors made bank off that guy, and he made the
Mhm.
right call. And it's like, hey, at the end of the day, they were pissed at him in the moment, but when it all came down to it, they were pretty happy with him. And I'm not saying we're going to turn around and like triple people's money, but at the end of the day, like, those investors that I talked to last week, it's like, guys, the best thing we can do right now is hold.
Well, you didn't
We
know
just
the
need to
10-year
hold.
treasury is going back down to 2%?
Yeah. The best thing we can do right now is hold. And guys, this still is looking like a 12 to 14% annual return,
Right.
So it's
Not
just,
bad. It's not
it's,
terrible.
yeah,
Right.
let's just be good for now. Okay.
That's a
Um,
pretty great year in the stock market. And you're not even
yeah.
considering the tax benefits that you enjoyed along the way by offsetting capital gains on other deals, and other money that you've made.
Inflation is the only thing that's
Logan, yeah. Inflation is the only thing that's promised. Yeah, and they print more money every day, but we aren't making any more dirt. And that's absolutely true. And we kind of talked about that last week about how they're what's it, 92% probability they cut rate in a month. But it doesn't make sense to me why they're doing that, because the economy is not suffering. Like, stock market all-time highs. I mean, I know the job market's kind of deteriorating, but gross GDP's gone up. Stock market all-time highs. Like, generally you would reduce the rate in order to spur economic growth, but like inflation's still hovering around 2.93%. If you reduce the rate, it's just going to make inflation come back. So I don't know. Who knows what the hell's going to happen over the next year?
it's funny you say that, man. Like literally that call that I was talking about, the beginning of that call, he was like, he's going to come in, he's going to cut the rates. And I was like, do we want him to? Like, is that a
Yeah,
good thing right now? I was like, I don't know. I'm genuinely asking. I'm curious.
yeah.
Oh man, we
Uh,
got Mark going today. Like,
Oh yeah, yeah. Hey man, this is a good. I've been trying to get some more show topics that inspite engagement. I mean, because we talk about real stuff in here, and when we finally get like people in the comments going, that's when things get really exciting. So this one seems to touch a nerve with people, which I'm glad about. It's doing the right thing to get people to talk and be transparent about what's going on. We're not the only ones with zombie properties. Plenty of people out there with the zombie properties. And so now what do we talk about now is, do you buy deals? Do you sell deals? Like what do you do in this market? And the only thing I know how to do is buy deals. When things are difficult and things are tough, when it's hard to raise money, when it's hard to get debt, those are your indicators there of it. Hey, it's time to go buy stuff, right? Because the masses are not throwing money at these types of investments, and you have the option to be selective with what you want to buy. And I'm knocking on wood over here, but I wholeheartedly agree. I wholeheartedly believe that between 2028 and 2030 is when things will kind of turn back on, and values will continue to go back up, and we'll be out of this low trough. Wait for 2026. I'm curious, Mark, you got to expand. It was survive to 25, survive through 25, wait for 26. What do you think is going to happen in 2026 that's going to magically change, all the difficulties that we commercial real estate investors are going through?
I'm waiting.
Do 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 do. I feel like Mark wants to come on here and be like a guest and talk about the guy.
Well,
We got him going right now.
while we're waiting, we could probably do that.
Yeah.
While we're waiting, I will say one thing, like hindsight, right? Love hindsight, man. I graduated college in 1998, guys. I remember specifically one of my buddies going, "You should buy Apple stock in 1998," and I was like, "Are you kidding? Like, have you seen that company?" I wish
I
I
know
had
my
done that.
grandmother, dude, she has Apple stock and it's split like what, 4 or 5 times since she owned it. I mean, most of her
Somebody
net worth is made up from Apple stock.
Somebody look this up. If I remember correctly, in 1998, it was like under a dollar.
Yeah, like $1,000 investment in like 1991 would be worth like 100 million today or something crazy.
Yeah, but like in 98 when I graduated, I'm pretty sure I remember it being under a dollar.
Mark, you got to expand on why do you think midterm elections are going to change so much in 2026? Tim Vest, you got something to say there. What do you think?
I'll be curious to see what Mark says. What I've been seeing with the midterms is that there's there's this a lot of people who voted the way they voted in 24 are seeing that kind of they're regretting their vote, right? So they're starting to think of going the other way. So it sounds like maybe we will see some balance. I'm not sure. Um, 'cause-
So, but I mean, that's kind of what we talked about last week was, is real estate more of a political pawn than anything, right? Because the real estate affects the almost everybody, right? I mean, everyone needs a place to live. Doesn't mean you own a place, but I don't. I'm curious what the percentage of population that owns a house is. Do you think what would you like 90%,
I
80% of the
don't know.
population?
Let's see.
Somewhere 80, 90% of the population own a house. My guess. We'll verify that, or
Oh,
at least
I would bet you it's not that high.
Oh, Cedric said 31 cents for an Apple share in
Oh,
1998.
there you go.
Wow. I'll
60,
take
60,
100,000 of those, please.
roughly 66% of Americans own a home.
66%. Yeah, so 66% of America. So that's the vast majority of people own a house or multiple houses in America. So how do you swing their vote your way? You impact something that most people own, and that's the stock market and real estate. I
$1,000 in Apple stock in 1998 would be worth 158,000 today.
That's it.
$1,000. Yeah.
That's it.
What is that? What is that multiple?
158,000.
That's a pretty good equity multiple.
Yeah, but Tim, you said you were gonna refinance and return all my money in 2 years. Uh,
Okay.
so Mark says, "Extend and pretend is ending. This administration wants to stay in power. Powell will be replaced." So if I'm interpreting that, you're believing that, we talked Mark, you should go watch our show last week. We talked about this, nominee. What's it? Oh gosh, I can't remember his name right now. I can't remember his name, but the nominee is, would you call him a political dove? What'd you call it, Tim? Political dove? Policy dove?
Policy dove.
Yeah, policy dove. He's going to be a policy dove for Trump. He's going to slash Fed fund rates, but ultimately, I don't think that's going to affect the Treasury yields. I mean, the Treasury bonds, the 5, 10 year Treasuries are, those are going to be dictated by the market. So yeah, consumer rates will go down on credit cards and auto loans and things like that. Prime rates with the banks will go down, but the Treasuries are still going to stay the same.
Yeah. By the way, this is why you don't believe everything you Google right off the bat, because I actually just did the math. That $1,000 would be worth 593,000 today.
I was going to say that's a Tim. I don't know. $158,000 doesn't seem like a lot.
Yeah, but
Uh,
if anybody's arguing about that equity multiple, I'd dump you in the nose.
Yeah. Mark, we do this every Tuesday at 10 a.m. Eastern time. We'd love to have you on the show next week if you're available. So the
Man,
20,
that's
26th.
like 7 a.m. for him, man.
Yeah. Morning coffee show with Tim and Tim. We're going to talk real estate and debt markets and leverage and all the good stuff people want to know about.
Um, all right,
All
guys.
right. Yeah. So, okay. I know we kind of went on a little bit of a ramble. I'm glad I had fun this week. I think it was just good. Let me know in the comments if you're watching this later what you think about zombie properties. If you own one, how you plan on getting out of it. What does your future outlook look like, in 2025, 2026? Do you think some political changes are going to change? Midterm elections are going to have an impact on 2026? I don't know. I mean, we're not that far away. I mean, it's what, 4.5 months away from 2026. I mean, it's almost Christmas movie time, folks. It's coming faster than you think.
I saw pumpkin spice crap last week.
Hey, Oktoberfest beers are in the refrigerators again. It's the best time of the year. Anyways, I appreciate everyone joining. Next week, we're gonna have Mark on our show as a guest. We haven't done a guest in over a year or something. Maybe 8 months, 10 months, something like that. It's been a while since we've had a guest. So we're gonna have Mark next week. Mark, you're gonna have to text Tim Best and let us know what the show topic is gonna be, and then we'll make that and send you an invite for 10 a.m. Eastern time next week. So, all right, guys, appreciate you all joining, and we will see you next week. Peace. Say bye.
See ya.
There you go.